What's up, you guys? It's Graham here, and unfortunately I have some rather discouraging news. Some of this might come as a surprise to you, and some of it might not. But regardless, here's what we're dealing with right now in terms of the middle class here in the United States. 78% of full-time workers are living paycheck to paycheck. 60% of Americans don't have $500 in savings. The average American holds $5,700 worth of credit card debt. They spend on average $1,497 per month on non-essential items. And finally, to top it all off, 25% have absolutely nothing saved for retirement. And the culprit of all of this, besides the lack of financial literacy taught in schools combined with the toxic consumer psychology to keep buying new things, is the average American budget. That's right, when I started digging deeper into how much normal, everyday people spend on their day-to-day expenses, it came as quite the shock and quite the revelation as to exactly why people have so little money left over at the end of every month. Not to mention, at this current rate, if this continues, the middle class are going to be financially ruined unless changes are made as soon as possible. But really quick, before I begin, I just want to sincerely thank everyone for all of your support, for hitting the like button or commenting down below. It seriously makes a huge difference in my videos, and the more engagement a video gets, the more likely the algorithm is to push the video out to a brand new audience who can also hit the like button and just repeat the cycle. And also, I want to thank our video sponsor today, Wealthfront, but more on that later. Alright, so here's where this all begins and where the trouble starts. According to the current population survey, the average US household income is $63,179 a year, which that in itself is not the main issue, but instead the problem is where all of that money is going. The Consumer Expenditure Survey broke down the average American budget, and now some of the statistics that I mentioned in the beginning of the video are going to start to make some sense. First, we have $10,800 going towards housing, $9,000 towards transportation, $7,400 towards taxes, $7,000 gets eaten up by utilities and other household operating costs, $6,600 goes towards food and Social Security and paying off debt or savings, and as you can see, this goes on and on. That means that the amount of money total left over on the average income on the average budget is nothing. At the end of the day, for the majority of the middle class in America, there is nothing left over for any emergencies or any savings or any buffer should something happen. But there's another side effect of not having enough money left over that many people don't talk about, and that's the profit you miss out on when you're not investing your money. When everything you have goes towards expenses, you inadvertently don't get to participate in the market in such a way that your money can continue to grow. That's why the top 1% has seen such tremendous growth over the last 40 years, because they've been able to invest in the markets and subsequently grow their wealth without working any harder. So with the bad news out of the way, how could this be solved? Well, I'll tell you, it's by taxing the rich because they make too much money. Just kidding, but now that I got your attention, we could do this by adding just a few small adjustments to the average American budget. And with a few very small minor adjustments, building your wealth is going to be a lot easier. Alright, so here are the biggest mistakes that the average person is making, and of course, how you could fix them. First, let's start with housing. When you combine both the housing expense of $10,800 and the operating expenses of owning a home that very few people think of, you come to a total of $17,148 a year. Now, the general rule of thumb when it comes to this is that you should never spend more than 1/3 of your income on rent. So in this situation, it's right on the line in terms of what's acceptable. Now, what most people don't realize is that things like insurance, property taxes, repairs, maintenance, and lawn care, and everything else that goes into owning a home could really add up, and it gets expensive. So much so that on average, renting a home can often be slightly less expensive than buying that same home when you take into account non-recoupable costs. However, there are some ways around this where you could get the best of both worlds and make money in the process, and that would be through a term called house hacking. This is the practice where you could buy a 2 to 4 unit property, or a home with a guest house, or a home with a livable basement, and then you could rent out the spaces that you're not using, and then use that money to cover your expenses. This is what I did shortly after investing in real estate. I bought a duplex, I moved in one side, and between the tax write-offs and renting out the other, I was able to cover my entire overhead of living in the home, essentially being able to live there for totally free. Now, the difficult part for this is that depending on where you live, buying a property could be very expensive. Beyond that, though, it's really important to also evaluate very closely whether or not it's actually a good idea to buy a home in your area. In many locations, renting can very much work out to be the cheaper option. But on the downside, you're going to miss out on home appreciation, and you're not going to be forced into a savings account by paying down your mortgage every single month. But either way, house hacking still has the potential to bring down your costs substantially. As long as you could save up enough for the down payment and you find the right house that cash flows for you to be able to live there for free. In fact, I'm actually going to be putting a counter right here just to show you guys how much you could be saving every single month. Now, even though it might be unrealistic to assume that everyone could house hack and live for free, even by renting out out an unused space or bedroom or anything else like this, I have a feeling that this would be able to save you, on average, about $400 a month. But before we go into that, when Wealthfront found out I was making this video and discussing why so many people were falling behind financially, they immediately wanted to step in and help more people invest, and so they've graciously agreed to sponsor this video. For those not aware, Wealthfront is an automated investing platform that utilizes software to find one of the best portfolios for you to grow your money long term. And then from there, you could sit back, relax, smash the like button, and they're going to take care of the rest until you're ready to retire. They even allow you to take automation a step further, to the point where you could decide how much cash you want to keep sitting in your account, or how much you want to invest on a regular basis. And from there, they'll make sure you get the most value for every dollar you have without you needing to do any more work. This is ideal for people who don't want to spend all their time researching their own stocks, especially when study after study suggests that the vast majority of traders can't beat the market and are best off investing in a diversified portfolio instead. So Wealthfront aims to get you the best return, and because I put up a fight on the phone, they've agreed to manage your first $10,000 completely for free for the rest of your life. So literally, up to that amount, Wealthfront is one of the most affordable robo-advisors out there. Plus, they have one incredible benefit that very few other investment platforms have, and that would be automated tax loss harvesting. This works by selling off investments which have dropped in value and immediately replacing it with a similar security, thereby allowing you to take a tax loss. That way, those savings could be reinvested elsewhere to increase your return. Best of all, Wealthfront software is checking every single day for opportunities like this, and they say that 96% of their clients have had their advisory fees fully covered by just this alone. Not to mention, I've been using their high-yield savings account for years, and I get access to all their financial planning tools for totally free, and that estimates how much you could be worth in the future and how you could better optimize your saving and investing so that long-term you could have more money. So if you're interested in signing up or learning more, like I mentioned, Wealthfront has agreed to waive the advisory fees up to the first $10,000 for the rest of your life, and all you gotta do is use the link down below in the description. So feel free to check them out, and now we'll get back to the video. The second, we have one of the biggest money wasters of the middle class, and that would be transportation. What I find remarkable is that on average, $10,800 is spent on housing, and almost the same amount, at $9,004 a year, is spent on transportation. Now, according to Experian, they found that the average US car payment is $568 a month. Combine that with another $250 a month in gas, $150 a month for insurance, and then maintenance beyond that, and it's easy to see why transportation is holding so many people back. Plus, if you want to hear this getting even worse, the average interest rate on a car loan is 5.27%. So right there, the average person is buying a car that's losing value every day, that's costing them $9,000 a year, including a 5% interest rate on whatever their loan balance is. Arguably, this is one of the worst purchases that someone can make. And just by fixing this one single expense, you could change the entire trajectory of your life, your net worth, and how much money you have invested. My recommendation is this: unless you need a really nice car for professional use, go and get the most affordable, reliable, good on gas used car that you could possibly find, and then drive it until it doesn't run anymore. I know it's not going to be the coolest car, but a 2008, 2012 Toyota Camry is something that you could buy for less than $10,000. It's incredibly reliable with good gas mileage, cheap insurance, and cheap parts. So instead, it's worth it to wait until the car that you want has already taken the biggest hit on depreciation, and then buy it at the bottom of its depreciation curve. For example, a brand new Toyota Corolla costs $27,000, but buy a 2014 car that's 7 years old and it's half the price at $12,000. Now you buy that same car 10 years old and it's $8,000, and buy a car 14 years old and it's $7,000. So as you can see, the difference in price between a 2011 and a 2008 is just $1,000. So over those 7 years, you've only lost $27 a month in depreciation. And when you see that the average American is buying a brand new car every 6 years, you can see how that depreciation really adds up significantly over time until the rest of eternity. So instead, buy a used car at the bottom of its depreciation curve, don't lose a lot of money from this, and then drive it until it stops running. That alone could easily save you $5,000 a year or $416 a month. Now, even though you might not be the coolest person on the road driving around in this, you're certainly going to be the coolest person at the bank. Next, we got to talk about one of my least favorite terms in the entire dictionary, and that would be tax. taxes. That for me is basically the monetary equivalent of smashing that dislike button. Now here we see on average $7,432 is going to the IRS, which is pretty normal for most W-2 employees on payroll. However, for many people in this situation, one of the best ways to save money and invest at the same time is to make sure you're taking advantage of your employer's 401k if you have one. This is a tax-advantaged account that lets you contribute up to $19,500 a year in pre-tax money, meaning for every $1 you contribute to a 401k, you are reducing your taxable income by that very same $1. So that way you owe less money in tax and therefore you're going to have more money saved up to invest. Even better than that, but some employers will also match your contribution dollar for dollar, essentially doubling your initial investment upfront instantaneously with no risk whatsoever. Now, if you're watching this and you're thinking,
"But Grant, why are you telling me this? This is all just common sense. Why don't you go back to making more black and white angry compilations of you yelling? That's what I really want to see."
Well, if you thought it was common sense, again, you would be surprised. According to the US Census Bureau, only 32% of Americans are investing in a 401k. That means that more than 2/3 of Americans are not utilizing this to reduce their tax bill, even though this would not only help them save more money, but also invest more money. So my biggest tip here to reduce your taxes is to contribute to a 401k. That's going to get you invested in the markets, and most likely you'll end up saving about $150 a month. After that, we have food at $6,600 a year or $550 a month. According to the study, about 60% of that food was eaten at home, and the remaining 40% or $220 a month was eaten out at restaurants. Now, I'm not just going to sit here behind my phone or computer screen and start yelling at you for spending money at restaurants. That's a no-no. Even though that would be an easy solution to start saving more money. But instead, I'll take a more reasonable approach. I think if you're dining out, going to restaurants, or getting food delivery, avoid doing that out of laziness. Like if you're going and buying a $20 lunch from work every day because you don't feel like packing lunch from home, avoid doing that, and that's a big money waster. But if your idea of having a good time is going out once a week with friends or family to a restaurant, then sure, I think it can be a valid expense as long as you're not dining out at Mastro's. So I would say the best way to save money here is to eliminate all lazy spending. If you're too lazy to make coffee at home so you go to Starbucks, stop it. If you're too lazy to make food at home so you spend $30 on food delivery, stop it. Going out to eat at restaurants even though you have perfectly good food at home that's about to expire, stop it. By doing this, even if you're able to save just $100 a month, it really begins to add up, and this is all money that you could be using to put yourself ahead financially. Next, we have Social Security, personal insurance, and pensions at $5,528 per year or $460 a month. Now, even though Social Security and pension might be a fixed cost depending on where you work, personal insurance is something you're absolutely able to shop around for. I think you would be utterly surprised how much money you could save with an hour's worth of work calling around just to compare your insurance rates to try to save a little bit more money. After all, I saved 15% on my car insurance by smashing the like button for the YouTube algorithm. No, but seriously, just recently I had to switch my car insurance over to Las Vegas. I spent about a half hour submitting applications around, and I was able to find an insurance provider for $30 a month cheaper than the other lowest rate I got. That works out to be a $360 a year savings just for some work I was doing in the background. And I bet that same would apply for you if you spent the time to shop around. I nearly guarantee for probably 75 to 80% of you, if you just spent 30 minutes shopping around insurance rates, you'd probably be able to save another $30 a month. Now, I know it's a pain because that means you're going to be getting a bajillion phone calls from all the insurance companies you decided not to go with. But just block those numbers and enjoy some of those sweet, sweet savings. Next, we'll talk very briefly about debt repayment and savings. This study lumps them together at $5,252 a year. But when the average American has $5,700 worth of credit card debt, I think any type of expense like this is unacceptable, especially if there are other ways that you could cut back and eliminate this debt altogether. I would say the biggest issue I have with this is that the average credit card interest rate is 16%. And that means on a $5,700 balance, you are spending $76 a month that goes straight to the credit card companies every single month that you don't pay off your bill in full. Now that might be a good thing if you're buying American Express or Visa stock, but it's not so good for you if you're actually the one paying interest, because that's essentially just like you're flushing money down the toilet. So instead, I would take the approach of cutting back as much as you can in any area possible, and then throwing all of that money towards paying down any debt that's above a 5% interest rate. Now, once the debt's paid off, you're gonna have that entire amount left over to then go and reinvest elsewhere. But until you're completely out of credit card debt, I would say paying down credit card debt would be your biggest priority. And since we're adding all of this up, the average person would see a savings of $76 $96 a month that would otherwise just be going to the credit card companies every single month. Beyond that, we have a few other things that we could improve on. Americans are spending, on average, $133 a month on apparel. If this sounds like you, just go and take a look at your closet and evaluate how many of those clothes you actually wear on a regular basis. If I were to guess, you probably have the same few shirts and pants and jackets that you wear 90% of the time. Or maybe I'm just projecting myself onto you because that's what I do. But if that sounds accurate, stop shopping, or at the very least, cut down your shopping by 50%. That would equate to another $65 a month in savings. And finally, we have another one, vices. This includes things like lottery tickets, and so on. Now, even though this one is only $64 a month, unless there's some sort of hidden benefit here that I'm not understanding, most likely this is bad for you and it's a waste. Now, I understand the occasional glass of wine or drink with friends or the occasional lottery ticket just for fun. But really consider how much value you're getting out of this and whether or not this is actually adding to your life. Even if you're able to cut back on this by just $20 a month, that does add up. That means between everything I just mentioned, it's possible for the average household to begin saving $1,257 a month with very minimal effort relatively easily just by cutting back slightly on existing expenses. And I'm sure for a lot of people watching, just having an extra $1,200 a month left over every single month would be a game changer for you. And in terms of how much you can invest, it really begins to add up. If you were able to keep up that savings for 35 years and invest $1,257 a month into a broad index fund, averaging an 8% return with dividends reinvested adjusted for inflation, you would have over $3 million at the end of those 35 years. You could literally be a multi-millionaire in the future just by slightly cutting back on some of your expenses today. And that's all on a household income of $63,000 a year. And I would argue that everything I've mentioned so far is not too unreasonable, it's not too extreme, and it's not too out of the ordinary. These are really just solid, long-standing financial habits that you could begin implementing today. And doing this is going to add up to a significant amount of money in the future. Even if you were just able to save this amount up for 25 years, it would still turn into a $1.3 million nest egg and continually grow at $96,000 per year, even if you never contributed any more money. So even though, yes, the middle class is financially ruined as long as they're living paycheck to paycheck, thankfully it doesn't always have to be that way, and with a little adjustment, you could try to work out of it with some of these methods that I just mentioned here. So with that said, you guys, thank you so much for watching. I really appreciate it. As always, if you guys find this helpful, make sure to destroy the like button, subscribe button, and notification bell. Also, feel free to add me on my second channel, The Graham Stephan Show. I post there every single day. I'm not posting here. So if you want to see a brand new video from me every single day, make sure to add yourself to that. And finally, if you guys want 4 free stocks, use the link down below in the description because Webull is going to be giving you 4 free stocks when you deposit $100 on the platform, with those stocks potentially worth all the way up to $1,600. So if you want to get the offer before it expires, use the link down below. Let me know which ones you get. Thank you so much for watching, and until next time.